Okay, let's go over our weekly market recap for April 29, 2024. Market headline number one. Last week, we had tech come back with a vengeance, coming with strong earnings from technology companies Google, Microsoft, and Tesla. We also had NVIDIA. Everyone was buying the dip, which helped offset some disappointment earnings or reports from the economy and in inflation. Gold, which has had a great 3 weeks of April, there was some profit taking in gold, so we'll see if that continues. Market headline number two was a slowdown in growth after two very, very strong reports on growth in the third and fourth quarter of last year. It came in a disappointment. Everyone was off at a 1.6% annualized rate. And now with that and higher inflation, the dreaded S word is starting to appear. And I mean stagflation, and that is now replacing the word recession as the key buzzword for 2024. All right, market headline number three from last week is yields continue to rise. As you can see from the beginning of this year, when they were about in the 4.2 to 4.3 range, we're now tapping up into almost the 5% range. That's a big move in bonds, and we haven't seen some of these since last November. So here we go again with rising yields and bond prices coming down. All right, let's go over the top three market movers for this week. On Tuesday, we get the Case-Shiller Home Price Index. We get to see if that is starting to rebound. And then we also get consumer confidence on how the consumer feels. Thursday, we get the Fed's rate decision and Powell's testimony. Right now, there's a 97% chance that there will be no change, no interest rate cuts. But what they'll be doing is listening to every word he says on when he will possibly be cutting rates in the future. On Friday, we get the U.S. employment report for April, and that is a key, probably a number to look at because that will be the third leg of this stagflation stool. So if we get lower or slower growth, higher inflation, and jobs number going down, then we definitely are in stagflation. So that will be a key number to look at on Friday. Here are some of the corporate earnings. It is a big week of earnings. On Tuesday, we get Amazon, AMD, Eli Lilly, 3M, McDonald and Coke, and Starbucks. On Wednesday, we get Pfizer, CVS, MasterCard, and others. And Thursday, the big one will be Apple, but we also have Coinbase on the Bitcoin rally recently, and ConocoPhillips and Amgen to wrap out this week. All right, let's go over the short-term chart of the S&P 500. As of April 15th, we went back to protect mode. If you look at the chart here, it looks very similar to what we saw last summer heading into the fall. So I'm not going to get all that excited until we get back up above 5,200 and maybe at all-time highs again. And right now, it's still the equity markets are performing well year over year on a year-to-date basis at 7.3. So we shall see, but anticipate that we're going to go through some chop heading into the summer. All right, let's go over the bonds. As you can see here, after a nice rally here, we've been going kind of sideways and chop, kind of what I anticipate on the equity market. Well, it finally broke down as yields continue to rise. We went back into protect mode on April 4th, and the year-to-date performance for the bonds are negative 3.1 on a year-to-date basis. That's it for this week. Thank you for joining us. Our next weekly recap is on Monday, May 6th. As always, please like and follow, and we shall see you next week. Have a great week trading.